What's your thoughts on shorting Apple stock to a target of $200 over the next 60 days?
Mistake. Like, despite me not liking the performance and the innovation or lack thereof on the phone, you have to realize how many homework assignment. Let's get back to the basics, right? How many hedge funds are positive that Apple will go up over the next year? Now, if you're an amazing trader, maybe you can find a way, but I wouldn't short Apple down to get more than maybe a 5 or 6% gain because there's too much buying power. So, like when you're investing in trading, what you're saying is when I think a stock is going to go down, my money is more important than every government, pension fund, and hedge fund on earth. And because of price action, I'm going to make it go a certain way. The predominant trend on Apple has been up probably since 1998-ish, definitely 2001. This is a trade I would not like to take. I think you're better off trading a asset with lower profit margin, like an Intel, to the downside, or getting an option or a future and shorting when we have opportunity, maybe on a Tuesday or Wednesday to do so. But Apple, I wouldn't say that it's a company you should never short, but the probability of having a great return on it is very low. It's very low. Don't take all my little hate for the phone as slander against the company. They just need to make a trifold phone instead of a quadruple. Fellas, if your girl get the Huawei and you get caught up in 4K, how you gonna talk yourself out of it? It's gonna be tough. It was Chinese AI agents that, baby. It wasn't.
Palantir, I'm sure. I mean, let's just take the number. Let's throw the 200 number out on short. Yeah. Let's just take the 60-day number. 60 days from now brings you to what month? November, right?
Yeah, you crazy.
Historically, since 1950, the best month to trade stocks are April and November. Specifically, tech stocks, November. They've seen an average of a 2% growth in the month of November.
Yes.
So if you're trying to short something over 60 days when it's about to have historically, not just me, historically have its best month going into December, which we already know the fourth quarter is the end of the fourth quarter is a strong. I wouldn't suggest it. I wouldn't say
you're gonna have a bloodbath just like the other presidential candidate. Not gonna be good. Oh, and for journalistic integrity, I was wrong about the 50 basis point hike. I was wrong.
That did happen.
That did happen. I was so wrong.
And quadruple witching did happen, so we saw a slight pullback. Yeah,
that part of the call. I didn't see 50 basis points happening, but here we are.
Recut. How is that going to affect the stock market?
I mean, if they keep pricing them in how they planned, it's going to push stocks higher for sure. If money is cheaper, I don't think it's the best solution long term, but I'm not smart enough to have Powell's job. So, but I did say if that happens, how the election would pan out.
What'd you say?
Queen gonna win.
What 50 basis points? There's another.
Yeah. And if they hike again before November.
Yeah. So the next meeting isn't until after the election. I don't think they have a meeting in October scheduled. So I think the next one will be mid-November. And the expectation from all analysts, from what I'm hearing, is another 25 and then perhaps another 25. So another 50 by the end.
Which will lead to a Christmas rally for sure.
Which is another reason when we're talking about why you wouldn't short a company
short in November. Hell no.
Yeah,
and it may come early. Yeah, it may not be the third week in December, but we get a nice little boost in December. So those are 2 months I would not want to be looking to short, especially when hedge fund managers are bringing in clients in the fourth quarter. You are trying to avoid losses while bringing in new clients. No, I wouldn't do it. I would wait till February, if anything.
Yeah, and then think on the opposite end of the spectrum, if you got into some of those positions when we saw a pullback in early September, what those positions will look like
August.
By the time you get to November, by the time you get to December, you're going to start seeing some real substantial gains.
Absolutely. Just continue to hold. I know sometimes the best lessons that have the biggest impact are the simplest but hardest to follow. just hold for the long term. You don't need to find more information. You really don't. I know people ask about gold and palladium and all. It's like, bro, Apple, Microsoft, Vanguard, BlackRock, Nvidia. If you down 20% cut, rinse and repeat.
When the Fed lowers rates, there's other regional. So there's the federal bank. I think there's actually 2, and then I think there's 8 regional banks, and then so the banks. Okay. Banks borrow money from banks and they borrow money from banks. So it's the federal bank that lends money to the regional banks, which lends money
Federal Reserve,
which lends money to the regional banks, which then in turn lends money to your local banks. So when they lower it, the money's cheaper. So it's cheaper to borrow money. And then that becomes a trickle down effect. And that's cheaper for the average American to buy a car. It's cheaper for the average American to buy a home. Credit card rates go down.
Yep.
So the idea is that stimulates the economy because money is cheaper. So now it's cheaper to borrow money. So now more people would be buying homes. More people would be buying cars. More people would be using credit cards. It's the whole thing, trickle down effect. If you do that for too long, then that can cause a problem because that can cause inflation.
Yeah.
And so that's the downside of it. So, but they cut rates when they want to stimulate the economy. They raise rates when they want to try to curb inflation. So cutting interest rates usually has people more optimistic about the economy, at least for the short term. And we'll see how that plays out with the market, but could potentially be good for investors. We'll see.
Yeah, it'd be good.
There's a slight issue with it though, because everything you're saying is true, but the average consumer, that's why the CPI is important. When they go to the supermarket, those prices haven't come down,
and they're not going to bring them down. That's the honest truth.
So
remember, 2020 was the supply chain issues.
Right. So
that's been fixed. They have not adjusted prices.
Then that leads to price gouging. we could call that. So that we don't have an answer for that, because yes, rates can come down. Yes, if I'm in the market, great. If I want to buy a house, great. If I want to buy a car, great. If I can't afford my groceries, not so great.
Well, that's 2 different conversations. The price of groceries that's inflation that actually occurs over the course of time, where everything goes up. The shirt that I'm wearing today was probably 50% lower 10 years ago than it is today, and it's never going to come back down again, right? Like the price of an apple is never going to. It might have short-term dips, but it's never going to come back down drastically. Like that doesn't really change. That's all. Consumer goods go up like this. Consumer goods go up like this, just like everything else in the economy go up like that. But the idea is that the amount of money that you make goes up also over this course of time. So the amount of money that the average person made in 1970 is nowhere near the amount of money that the average person makes today. The problem is that when the consumer goods go up faster, then the income goes up.
Or the multiple,
Right. But like I said, that's 2 different conversations in the economic conversation, because that's always going to happen.
Yeah. I think
food, the price of food is always going to go up.
And I think people, because we get that question, I just walking around, people ask you that, well, the rates are going down, and then they're still trying to figure out, well, how come that hasn't come down? They don't have to work mutually exclusive to each other.
No, it's only on things that require you to borrow money.
Right.
It's like buying a home. Check out the class that we're going to do Thursday at 9:00 on YouTube. Buying a car, credit cards. These are things that require loans. So those are things that an interest rate cut would affect. But no, an interest rate cut is not going to affect the price of Balenciagas.
Yeah. Or daycare, or
y'all shouldn't even be buying Balenciaga.
Why?
No, I'm just saying, if you're worried about your groceries, you shouldn't be buying.
You shouldn't be buying it, period. But
well, that's why
you worry about groceries for sure.
Yeah, I'm referring it to the person that's wondering why, because people will get confused with it. They just hear rates getting cut, things are getting cut, and they get confused. So like this explanation, I'm sure is going to help people who will. Oh, okay, that makes sense now.
And they'll find another reason why prices haven't come down. But in 2020, it was supply, even the supply chain. That was some bullshit. Okay, cool. Because a year and a half later, you had excess supply before all these GPUs got made.
But that's why even when I heard Team Matt had posted something, like, it was like even real estate. So interest rates go down, but the price of real estate usually goes up. So I was like,
Absolutely.
okay, if you're waiting to buy a home to have a lower interest rate, you might wait 2 years and that interest rate might drop. In the course of waiting 2 years, the interest rate dropped, but the price of home that you were waiting for is now up $250,000. So you saved a half a point on your interest, but now you have to pay $250,000 more to buy the home.
Yeah, now that 20% down looks a lot different.
Dramatically different.
Or the 3.5% very different. Yeah.
And the inventory you want may not even be there.
That's a good thing on refinancing. And when you have a loan, you can refinance an auto loan as well. You can take advantage of the price now, even if it's a high interest rate, and then refinance when the interest rate drops.
Yep.
Yeah.
The interesting thing is, like, the people that got their homes pandemic times, they're not refinancing anytime soon.
Oh, no. They're not touching that.
When you had interest rates that were like 2.8, 2.9, 3, low 4s, they're like, no, we'll just sit here. we're good.
Yeah.
As the equity grows inside the value, if those home prices go up.
Yeah.
It's like, I think MG says that all the time. Like, when's a good time to buy? Right now.
Yeah, or buy the rate down.
And buy the rate down.
Or double your payments, or another career, side gig, other business. Find a way to shovel money towards that principle.
Yeah, it was like, don't wait to buy real estate and wait. It's that theory.
Yeah.
That's not entirely true. You always want to buy assets at good prices. It's like stocks. You could lose money in stock market by buying stocks at an all-time high, and then it crashes. So yes, real estate usually goes up, but you still don't want to just pay $1 million over asking just cause.
Yeah.
No.
Yeah.
But that's what's happening. If you're in Miami, in certain areas, I mean, 90% of houses are sold over asking. 90%. Yeah. So it's like in that theory, it's like, just buy it, right? Because I mean, what else are you gonna do? Now that could work out for you, because it could be like, all right, well, in 3 years it's still gonna go up, but eventually it's not. Eventually it's going to correct, and then when you get caught in that, that's how you actually lose. So that's why it's important just to be fully educated, because those sayings are problematic.
Yeah, no, I think there's obviously different aspects, right? So, like, no, you're not going to just buy anything. You're obviously going to do your education around it. You're not just throwing over, and people are throwing money over the asking price. You're going to do your time. The overall idea of it, like, okay, should I wait? Because like right now, people are in that scenario. Like we know people that are trying to buy homes, and you're thinking, damn, this price is now going up by 200,000, and I'm waiting. Yeah, the rate went down, but
yeah,
I can't. I can't. I thought I couldn't afford it then. I definitely can't afford it now.
Yeah.
Right. So I mean, you still got to obviously do your homework, educate yourself, surround yourself with mentorship of people who've been through the space before. Even now, like, I'm getting the education process firsthand.
Yeah.
I'm learning, right?
Yeah.
So there's going to be a learning curve. You want to make the best decision, but it has to be, number one, be educated decision first.
Yeah.